We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. The web is raging about gold versus Bitcoin. And quite frankly, the Bitcoin crowd is shouting down the gold market. And a lot of gold people and silver investors are selling up everything and getting into Bitcoin. There's a couple of things you should consider. First is we're going to look at the Bitcoin market. Bitcoin market is a two-transaction market. You buy and you sell. The gold market, the silver market, is you buy and you can sell, and people can go short, and people can go short to cover. So it's a foreign exchange market. So you've got Bitcoin with two type of transactions, and gold and silver markets with four type of transactions. Now, as we know in the Bitcoin market, that's going to change very soon when the CME comes along. At the moment, the Bitcoin market is 5 billion transaction value a day, and the CME, if it's going to have any effect on the Bitcoin market, it's going to have to be the big boy in the room. It's going to have to be 20, 30, 40, 50 billion dollars taking on the Bitcoin. Now, if you're going to consider the futures of the CME and the effect it's going to have on Bitcoin, you've got to consider two types of products. As we know, in the gold market, they can do naked shorts and they can suppress the price. But don't forget, we had a rally from $200 all the way up to was it 2,000? That's right. So how did that make a difference? The point about it is the naked shorts in the gold market can be defeated because people want to buy them because it's contracts that they can take higher. Now, in the Bitcoin market, the shorts and the short to cover type transactions is going to start in December with the CME. It's just how big they are. Now, consider two products out there. You've got futures with gold and silver, which we know naked shorts can suppress the price, and even the BIS, and they hit the market in the middle of the night. And we know that they can suppress the price, but quite frankly, if people, investors, wanted to defeat that, they just buy. As we saw with the gold rally in 2016. And also consider the futures market with the euro dollar, or the futures market with the Aussie dollar. The transactions on the foreign exchange are trillions, and the futures market just has no effect. But the futures market is there for the option trading or what have you. So the question is, how big is the gorilla going to be with the CME? They're going to have to be large to defeat the Bitcoin market. They can have periods of time where they're large, and the CME will defeat Bitcoin. Because quite frankly, in trading, in the trading world, it's how big is your account or how big is your party versus the other guy. Now, if the other guy is huge and you beat him down for a bit, he's got so much money he doesn't care. He's not going to lose because he's got more money to beat you out. It's a game of money. So quite frankly, it's there's a big gorilla to enter the room in the Bitcoin market. So that's going to level the playing field up between Bitcoin and gold very soon. Okay, so that makes the markets even. So Bitcoin has enjoyed this gain, but from a Wyckoff point of view, we had a massive base down here, alright, sign of strength, big volume come in, and now we're getting our rally. And as you can see, it's exponential. So to go from 1,000 to 9,000, that's 10 times your money. To go from 9,000 to 100,000 is 10 times your money. To go from 9,000 or to 20,000 is 1 times your money, it's 100%. So my point is this: if you're looking at Bitcoin, or you're looking at, I'll switch to gold, one has a base, and one has gone exponential. As a Wyckoff investor, which one do you find attractive? Well, obviously it's the gold one, because it is setting up a base of accumulation at the moment, we believe so, and it is ready for its markup process because the accumulation is down here. Once maybe a shakeout happens or what have you, the big boys will mark it up. And what will happen is that everyone's looking into Bitcoin. That means it's going to be very easy to mark up gold. Because when they want to mark up gold price, they do not want public selling getting in the way or public buying getting in the way. So that means they can take gold up, the big boys take gold up to 2,000 very quickly without interference from others that get in their way. Why is that important? Because all the others, the public, have gone into Bitcoin. Now what's going to happen in Bitcoin? Well, if you purchase down here and you got up there, you're going to release some of your asset because you're going to bank. You're going to take bank. And people say in Bitcoin, well, why are you going to sell it and buy fiat currency? Well, you're not going to buy fiat currency. You're going to buy gold and silver because it's going to be a hedge. In the words of Max Kaiser has Bitcoin, gold, and silver. So he knows, because he's an experienced market player, he knows you can't be in one singular asset, right? So he knows if someone's going to sell Bitcoin, gold, and silver, you can move it into gold because one is a yin and there's a yang. He's not going to buy US dollars. Actually, US dollars would be just a bad idea. So my point is that this is going to have a consolidation zone with some sort of retracement. So if there's a risk of a retracement and consolidation zone, and that you know going from 9,000 to 20,000 is a stretch, which is only 100% gain, which is bugger all the Bitcoin world, you would say, well, look at gold. It's at 1,200. Could that go to 100%? Yeah, maybe 30, 40%. But still, the odds are increasing that gold's got a move coming up. Why? Because the smart money don't chase exponential moves. Now, just a caution on that, the volume is very attractive to Bitcoin. I do believe it's going to go higher, but it's not going to be in a straight line. Nothing moves in a straight line. You can't find a market moving in a straight line. It doesn't crash badly. Just look at the iTulip thing. Now, what should happen to Bitcoin if it's going to get to 100,000 or 50,000 is look at Apple. Apple went from what was it, $60 all the way up to 130, but back in the day that was 600 to 1,000, and they had these little consolidations on the way like this. So stepping stones. We want to see stepping stones that pause and allow new money to enter the market. Now, if Bitcoin's taken off from here, it's got to a 9, say Bitcoin, we're going to see a stepping stone that go on for a year where the new money sells up, but more money comes in, fresh money gets the market higher. So what we want to see in Bitcoin, we want to see consolidation pattern that goes for at least a year. Because the money they got in here are taking profits, then new money comes in, takes up to the next level. Because people realise they're sitting down here, they had $10,000, $100,000, and now they're worth $1 million. The wife is going to talk to them and say that, well, the family says, listen, you got $1 million. You don't ride this to the moon. We're going to pay for the kids, and there'll be some selling coming on because it's changed their life. And like you say, they will say, we're not going to buy a US dollar. Well, it won't be such a bad thing. They're going to buy gold and silver as a hedge because they're that type of people. Right? They're anti-fiat. They're going to buy something which is anti-fiat, anti-bank, and say, well, Bitcoin, I'm going to keep my Bitcoin going, and then I'm going to buy some gold and silver. Most people you listen to on the web, they are into Bitcoin, and they know they're using this to buy gold and silver because the gold and silver crowd are going into Bitcoin, and they're going to switch back and forth. If you're solely into Bitcoin and nothing else, and no asset class, or just cryptocurrencies, you're flipping mad. You're able to have a hedge between Bitcoin and the hard stuff. Okay? So, the Wyckoff point of view is you want to invest in something where the move is about to happen. And if the move has already happened, like in Bitcoin, you want to see a pause or a pattern to build up a consolidation of accumulation for the next move. At the moment, Bitcoin is very, very high risk in the Wyckoff point of view. Might go a little bit higher, but it will attract sellers. In the gold market, we have a base building. We're looking for a sign of strength and jumping across the creek or jumping across resistance. But on the odds of a Wyckoff analysis, this has gains to be made. Now, that doesn't mean it might not go down before it goes up. But at the moment, from a Wyckoff point of view, it is the place where we should be hunting. Okay, so once again, I just want to refer to the Apple chart. Apple chart is the ideal chart from accumulation to a high where we have stepping stones along the way, where it pauses and rebuilds accumulation and goes higher. And at the end, we know we had a little bit of exponential move. So that's what we want to see. Thanks for watching. If you're in the Bitcoin space, open up your gold and silver account to hedge your asset. So if you scan the web, you'll find that most investors in Bitcoin who are honest enough, who are smart enough, will say they're riding 3 classes of assets or 3 types of assets: gold, silver, and Bitcoin all at once, and they're balancing their accounts between the 3. Now, the game is going to change with Bitcoin, as I mentioned. At the moment, it's a 2-transaction market where only buy and sells. It will have shorts and short covering coming in. It's just how large that's going to be, and you can bet that somehow they're going to have a bit of a raid on that in 2018. That's the summary. Thanks for watching.